Charting platforms often have an array of drawing tools that can help you identify trend and support and resistance. In this video, we'll look at three: trend lines, price levels, and Fibonacci retracements. For this example, we'll use Toyota Motors, symbol TM. Let's start with a basic trend line. Sometimes it's tough to see the trend initially. Trend lines really help make the trend clear. They're also used to draw support and resistance. In paper money, there are several ways to add a drawing. I can click the Active Tool button here, or right-click and select Add a Drawing, or I can click the Drawing button here. Let's do it this way for this example. From the menu, I'll select Trend Line. To draw a line, I'll start by clicking the highest point on the trend, then connecting it with other highs. This creates a line. As you connect these points, try to join as many highs as you can. The downward slope of this line confirms a bearish trend. It also makes a diagonal resistance line, which could be used to identify resistance bounces for bearish trades or breakouts for bullish trades. Let's draw another trend line. This time I'll click the low in October and then click the highest low in March, connecting as many lows as I can. This is a bullish uptrend and diagonal support. This line can be used to identify support bounces for bullish trades or breakouts for bearish trades. Now let's try a different tool, the price level. This time I'll right-click, go to Add a Drawing, and select Price Level from the menu. This tool allows you to draw perfectly horizontal support and resistance lines. This is helpful when you see a significant price level and want to consider how it might impact price in the future. For example, Toyota made a significant high back in October 2013. I'll draw a price level by double-clicking at this resistance level. This will help me see how it affected the stock price later on. Here we can see where this price level acted as resistance in February 2015 and then support in June and July 2015. When support broke in July, a bearish entry signal appeared and a sell-off followed. The last drawing tool I'll demonstrate is the Fibonacci retracement. Technicians generally use this tool when they've identified a trend and want to get an idea of where that trend is headed. It helps to identify potential support or resistance levels within a trend by predicting potential areas of retracement. For example, a technician might use the tool when price looks like this. We just observed a downtrend and want to try to determine if and when the stock will retrace. To change tools, I'll select Fibonacci retracement from the Drawings menu. Next, using the trend we're interested in, I'll click the high point and then click the low point. This draws all the retracement levels over the chart. Now, we're simply looking for a resistance bounce. Once a bounce or a hold occurs, we could consider it an entry signal. Notice the stock rallied to the 61.8% level and found resistance. Let's use this tool again, this time with a bullish example. First, I'll remove the bearish example by placing my mouse over a line and right-clicking. Then I'll click Remove Drawing. The stock's been uptrending since October. If we wanted to trade this trend, we could apply the tool to a rally within this trend. I'll trace the rally that started on February 9th and ended on the 24th. As I scroll forward, you can see the stock pulled back to the 50% retracement and bounced. Then it rallied to new highs. You can see that the previous low became a prominent support level. The trend line, price level, and Fibonacci retracement tools can help you identify trend and support and resistance. After identifying these significant levels, you can consider using them to take action as you buy and sell. Because trend and support and resistance are often easier to spot in hindsight, you may want to consider spending some time practicing with historic examples as we've done in this video. Doing so will help you as you use these tools in real time.